Gold rallies, but this part keeps silver anchored down. Check this out. This is from Action Forex, and it says gold crude oil prices soar on rising Middle East tensions, and the FOMC is next. That meeting is today, so we're definitely going to see an impact on silver and gold prices. And I'm going to make a big guess right here that the impact will be with gold because silver is not doing what it should be doing. I'll get into that in a minute. Check this out. Gold. Here, gold technical analysis. Now, from a technical standpoint, gold has surpassed the descending trend line that has been in place since the July 17th high around the $2,480 level. Wow. If you told me 4 months ago, I'd be talking about this, and it is just so exciting. The breakout has gained momentum without any retest of the trend line, thus not offering a better risk-to-reward entry point. The 100-day moving average provides support around the $2,400 level. So we're solidly in that 2,400 mark. Oh, before I forget, I'm giving this away. I'm giving away this American Silver Eagle. I'm sending it to your house. I'm sending it to you. All you have to do is go click on the link below. I'm doing a giveaway. You click on the link, you go to Whatnot. If you've never been to Whatnot, it is so awesome. You get silver, you get gold, you get anything collectible, anything. I mean, there's sneakers, there's people who are into Pokemon, whatever. I'm giving everybody $15 free. You just click on the link. You get $15. You could buy whatever you want. You could buy silver that costs less than $15, and you're just getting it. You pay the shipping and handling. It's like barely anything. So I'm giving everybody $15 to do this. You click on that link. And for the American Silver Eagle, I'm choosing one person. And out of all the people that click on the link and use that $15, and probably about 3 weeks now, the deadline's coming up. In about 3 weeks, I'm going to choose one person who has used this and gone to Whatnot, and I'll choose one random person. I'll announce them, and they're getting this American Silver Eagle that's mine, and I'm sending it to you. Of course, hit subscribe, hit the like button, get this information out there. It always really helps to get this information out there. Okay, let's keep going. So $2,400 for gold is wonderful, and you'd think that silver would follow because silver is supposed to follow, but I'm going to show you in a minute what's going on with silver. Immediate resistance is at 2,432, followed by the 2,450 mark based on the rules of a trendline break. In theory, the break should lead prices toward the previous highs at $2,480. With this meeting today, with the Fed meeting, it will be interesting to see if bulls continue to drive gold prices higher. Now, here's the strange part about silver. We would expect to see, right here, silver follow right away, but this is really having an impact these days on silver. This is from Reuters. It says let's see, let me highlight. No, it won't. It says a key part of the U.S. Treasury yield curve hits longest inversion record. Now, this inverted Treasury yield curve has always been the predictor of a recession. In fact, it's said that 9 out of 10 times that we've seen an inverted Treasury yield, like we're seeing these days, 9 out of 10 times it's followed by a recession. And here's another frightening fact. Sometimes, just before the recession, the yield kind of corrects itself, and so everybody gets happy. But it turns out that it's too late. Because without getting into the weeds of this, it's not really a direct response. Like the Treasury yield inversion is not so much a response as a reflection of what's going on. Here's a better way to explain it, because this has to do with silver and gold. If I was going to lend you 10 ounces of gold for the next 15 years, you would expect, or I would expect, that you would pay me back with some interest, because I'm giving you this wealth over 15 years. I would expect a good amount of interest over 15 years. If I was giving to you the short time, I wouldn't expect the same amount of interest. So the inversion of the yield curve is showing that the opposite is happening. And when the opposite happens for a long stretch of time with the 2-year compared to the 10-year yield, when the opposite is happening, that's when we see a recession. And typically, of course, nobody wants a recession. We don't want recession. But for us as silver stackers, history shows that a recession makes people turn to that safe haven of silver, and we actually get a boost in silver price. So even though silver is not immediately following the price of gold right now, as it should be, what we see here with this chart for the U.S. Treasury yield curve, it's actually telling us that we are set up for a big hit to silver, and it's coming straight at us. Hit that like button, hit the subscribe button. It really helps to get this information out there, and I'll see you in the next one.